Hello and welcome to this episode of Connected Thinking Podcast. I'm joined today by Michael Meadows from British Land, who's the Head of Planning. Hi Mike.
Morning.
Morning. We're going to talk today about how London fits into an increasingly competitive and volatile market. And we thought we'd get your views for our audience on perhaps where the market temperature is at the moment and reflect a little bit on your own company's results.
Yeah, sure. So I think it's an interesting time, isn't it? And it's been a challenging couple of years for real estate, but I think there are reasons for optimism in the market. If you look at where we are today at Broadgate, we've just launched Broadgate Central, 120,000 square foot of retail. The offices at One Broadgate above 96% let. We have 5 million square feet, and of our standing assets, only one floor available. So practically full here at Broadgate. We had our results recently, as you mentioned, and a good set of results. Some positive share price movement following the budget, and the company is due to re-enter the FTSE 100 before Christmas. So, as I say, reasons for optimism, although lots still to do.
And actually, looking at that in a positive light, yes, it's great to have such a full space at Broadgate, and the new resale seems to be doing very well. Further down the line, where do you see capacity? I mean, this is one of the things that's coming up more and more, is that actually there is no vacancy, there is no space at that sort of premium grade level around London.
Yeah, certainly what we're seeing, I think, in the prime office market, the occupational fundamentals are strong. We're definitely seeing some demand, kind of tailwinds in London now, but there is a bit of a supply crunch.
Yeah.
And that's maybe a double-edged sword. I think it's driving some rental growth, which is driving investors back to the market. So those occupational fundamentals are strong, and the investment activity is just starting to catch up, driven by some of that rental growth.
And you mentioned resale there, and obviously you've got a new resale centre just opened up here, but across the rest of the market, how is resale performing? Is it showing strength in the market?
Yeah, we own a lot of retail across the UK, from Inverness to Plymouth, and of different types, both in and out of town. We're the largest owner of retail parks in the UK, and that's been the strongest performing retail subsector since 2021.
Wow.
So kind of retail had kind of bottomed out and has come back. And I think particularly in that retail park market, we think it's the preferred format for a lot of retailers now. We talk about the 3 A's of affordability, accessibility, and adaptability. We're 99% occupied across that retail park portfolio. So certainly that's one market that's done well.
Yeah. And just following on from that, what do you think makes the London market attractive for investors? I mean, a lot of money flowing into real estate in London is international capital.
Yeah.
What do you think make the London fundamentals right for them?
Yeah, I think you're starting to see some confidence come back into that investment market. It's definitely been subdued for a couple of years, and I think go back to those two things that are sort of driving the fundamentals in office. The demand tailwinds. So we're now seeing office occupancy midweek above pre-COVID levels. We talked about how busy the trains were today on a Monday.
Yeah.
We're now seeing kind of Monday office occupancy increase, and that's kind of driving demand. We're seeing more return to office mandates. So office utilisation is rising. At the same time, you've got that supply crunch. So in the City of London, we're now seeing availability of new and refurbished space below 2% and falling. So that's driving rents and bringing investors back to the market.
But let's look at that office market particularly, and perhaps the changes in the last, let's say, decade or so. And I look specifically in this area around here, around Liverpool Street, where that kind of fortress this is an office block and this is what an office block does.
Yeah.
That narrative seems to have changed, doesn't it? And you've got a much more holistic setting for the office. Talk us through some of those changes and why you guys took the decision to open these spaces out more.
Yeah, definitely. I think we see sort of 4 drivers of office demand. So location, we're right next to Liverpool Street Station, the busiest station in the country now. So that location for workers coming into the office is crucial. Quality, talked about that new and refurbished space, really strong demand for that space, particularly in the core markets. Amenity and flexibility, and I think we're trying to design those 2 things into our buildings. I've worked on the Broadgate transformation for the best part of a decade now. When we launched the Broadgate vision in 2016, it was to make Broadgate a world-class 7-day central London destination. We chose all of those words carefully, and I think that the 7-day bit was really important. We recognised kind of 9-10 years ago that Broadgate was probably a bit underweight on kind of retail, F&B, amenity. I think we were around 4% non-office, half of that was gyms, so around 2% retail. And if you benchmarked against someone like King's Cross, it was closer to 15. So, through the developments that we've done here, Broadgate has become much more mixed use. With the launch of Broadgate Central, we've got 120,000 square foot of retail now across 100 Liverpool Street and 1 Broadgate. And that is part of that destination city, right? One of the things that makes Broadgate a destination at the weekend, but also for its office workers.
Let's talk about the weekend then, and actually the different types of people that now use this space.
Yep.
And I've seen people pushing prams and people wheeling, which maybe they shouldn't be wheeling, but they are through here. You see sort of families, tourists, visitors of a different sort than just office workers coming through the area. What sort of challenges and opportunities does that present for you?
Yeah, and certainly we wanted to become 7-day. We wanted Broadgate to be a place that people wanted to be. So I think you can do that through the retail, you can do that through the cinema, the Everyman over at 1FA, but also just by creating great public realm, great places to be, great places to sit. So we invested in Exchange Square, created a new park, made it much more greener, softer, introduced the water feature, and then you start to see kind of families coming in, people bringing their dogs and things that maybe you wouldn't have seen at Broadgate or in the city 10 years ago.
And more widely around London, are there any exciting schemes coming up in other areas around London that you've got going on?
So I'm obviously pretty biased to British land developments, but I think some interesting things are happening at Regent's Place in the Knowledge Quarter, how that campus is pivoting more towards kind of innovation, with kind of science and technology businesses moving in there, particularly kind of tech and AI. We're seeing a lot of innovation demand in London from tech and AI businesses, trying to capture that at Regent's Place, thinking about the kind of ecosystem, working with our partners in the Knowledge Quarter. And then we have a 53-acre regeneration down at Canada Water, which is, in much earlier stages than our other campuses. But
it's interesting you mentioned AI. I mean, just recently we've seen the press pick up on this phrase now. We want the UK to be an AI giver, not an AI taker. And that demand for innovation in AI, in those emerging technology sectors, is going to be huge, isn't it? And when you look at, let's talk about the Knowledge Quarter a little bit. When you're seeing new companies coming up there, they are very different to the type of companies that you might have in the city. They're not your traditional banks, law firms, finance. They need different types of office space, don't they? Talk to us a little bit about that.
I think their demands are a little bit different. We do see a sort of maybe a spectrum from your kind of traditional office through to what we might traditionally think of as a kind of lab or a wet lab. Maybe some of those businesses are more in between in the kind of sort of dry lab space. So an office, maybe it's more heavily serviced. but without maybe all the requirements that you see for a kind of a full lab. And as you say, I think those businesses maybe the way in terms of they want the ecosystem. Those bigger businesses want to be near the startups. A lot of these AI businesses didn't exist kind of 5 years ago.
Sure.
Are growing incredibly quickly, and I think their needs are different in terms of that ability to expand. So as well as traditional office leases, we will offer work-ready space, flexible space, and our kind of story space to enable businesses to kind of grow and stay on the campus.
Let's turn a little bit to volatility and to some of the uncertainties in the market. I mean, we've just had a budget recently. Do you want to comment a little bit about how that might impact your decision making going forward? I mean, planning and infrastructure have been quite in the forefront in the government's mind. They've been talking about it a lot. There's a lot of legislation coming through next year. We've already had Lyra last year. Talk to me a little bit about how British Land sees that.
Yeah, I think we saw a lot of volatility, particularly in the run-up to the budget, right? I mean, we can dissect the kind of pre-budget process, but there were lots of kites being flown around property taxes. We saw the impact that had on the housing market. We know kind of residential construction has been slow, but residential sales have also been slow, and I think that was certainly impacted by some of that kind of pre-budget run-up. When we got to the budget and the budget announcement itself, actually, there were probably very few surprises. I think you saw that in the reaction of the bond markets. The kind of gilt rate came down a little bit. I think that traditionally that is good for real estate. It's good for REIT shares. In some ways it was a challenging budget for sure, and there's some additional costs for business with the tax changes on pensions and minimum wage. But also, hopefully, now we can move into a period of a little bit more fiscal stability and the gilt rate coming down, and that should be good for the industry. And I thought there are a couple of things in there that were good. Some of the changes around the ISA rules, trying to encourage more retail investment into stocks and shares rather than cash. The listings relief, which I'm sure the city will have lobbied hard on. So, I think a mixed budget for real estate.
And a bit more closer to home, next year we've got the London Plan coming through, hopefully, and there's been a lot of consultation around that. What are your views on how the London Plan will perhaps help give a bit more stability, a bit more predictability to the London market?
Yeah, I think there's some really big opportunities for the London Plan review. I think there's a big opportunity to streamline the plan. I think that is the direction that the government wants to go in with with strategic development strategies. The London Plan, in some ways, tries to do it all. It's become a bit of a local plan for London. I think it could kind of refocus on some of the more strategic and spatial elements. I think we've got some clues from the London emergency measures of what might be in there, some of the changes to design standards, maybe how policy can be a little bit more responsive to the market in the way that the emergency measures have tried to respond to the kind of slowdown in the housing market with a temporary change in the affordable housing threshold. But ultimately, I hope we get a pro-growth plan, one that is encouraging of density, supports commercial development in the CAS, and that kind of replacement of some of the lost office stock.
Yeah, and I think it is important that we start to get a better differentiation of space around London, that it's not just a level playing field everywhere, and that actually the CAS, as we call it, does need some adjustment to make sure that there is economic growth there, that it does promote economic growth and drive jobs into the centre of town. And I think a lot of that has to do with infrastructure. And when we look at the Elizabeth line and the impact that's had just on this estate that we're in right now, with the Liverpool Street station opening and the Moorgate entrance as well, I think between the two of them, with Broadgate sort of stuck in between the two, I think you benefited from that. And I think we need to tell that story a bit better, don't we, about how infrastructure investment actually helps economic growth on the ground in central London.
Yeah, absolutely. And I think we we lobbied hard to get that entrance in the public realm, and not just via the station.
Yeah.
We talk about Broadgate's positioning on the Elizabeth line at Liverpool Street. We have a Japanese bank at 100 Liverpool Street, the building behind us, and that proximity to kind of Heathrow and the rest of London is really important. It certainly helped the kind of leasing story across London. I think we've seen kind of regeneration of parts of London on the back of the Elizabeth line. We've got the DLR extension coming to Thamesmead, but some of that sort of ambition around maybe Crossrail 2 feels like quite a long way off. Even the Bakerloo line extension, London will need to kind of lobby hard to make that happen.
I think we will, and I think we all need to come together, and this is one of the reasons why we started this channel, was to try and join up the dots between everything from planning and design and architecture right through to building operations and maintenance, and development and construction fits very much in that sort of sphere. And I think we do need to start telling that story together, that London story together, if we're going to see success. So it's good that you're very much part of that narrative, Mike. Where do you see future opportunities? Let's just talk about this estate a little bit.
Yeah.
Where do you see future opportunities in the Broadgate estate?
Yeah, Broadgate has been on a sort of big transformation since 2016, arguably even a little bit earlier than that, with the construction of 5 Broadgate and the new headquarters of UBS. Enabled UBS to stay at Broadgate, to stay in the city. At the same time, it freed up a lot of space on the estate as we were going through the EU referendum, and I think we had to kind of make some decisions then around the kind of space that we wanted to provide, how we might differentiate and diversify some of the tenants here. And I think those kind of traditional sectors of finance, law, professional services still hugely important to Broadgate and the City of London. But we've seen the kind of tenants diversify. We now have more media businesses in 135 Bishopsgate and 1FA, more tech businesses. We had a tech startup at incubator at 2 and 3FA before construction began on the new building. So we've been able to bring in different sectors, but also different sizes of businesses, as well as those kind of traditional larger occupiers in the city. I think we've seen more smaller occupiers come into the city. That sort of helps to activate some of the kind of public realm and feeds into the amenity.
And it's interesting talking to others as well, especially on the sort of leasing side. The appetite for international firms to magnetise to London, to come here and actually set up their, whether it's rest of world headquarters or an international operation here, it's unflinching, and it's great to see that you've got that baked into your plans for the future as well. So Mike, thank you very much for joining us today on the Connected Thinking podcast, brought to you in association with the NLA. Really appreciate your time.
Thanks for having me.